Hey traders, and welcome back to another video. Today we are going to be discussing when we can expect a trend continuation versus a reversal. So we're looking at the 15-minute chart here on NASDAQ. It is Thursday, July 31st, day before NFP. And really I want to dissect what occurred within the opening range, and more specifically, a setup that formed during the 950 macro. But before we take any setup, we have to, of course, build a bias. And how do we get that bias? Well, it's understanding basic things like what the trend has been, key liquidity, time, macros, order flow, etc. So we'll dig into all of that here. So already, if we're looking at this 15-minute time frame, there's two main things that we can really take away and relative to liquidity. So we're going lower upon 930 open right here, right? And quite aggressively, we're zooming lower. And we're sweeping a lot of sell-side liquidity here. And the trend, not only in this fractal of price, but I'm sure you guys are aware, has been extremely bullish as of recent, the last couple months or so, okay? So how come we're not just saying, okay, it's time to buy now? You know, we've taken out all that sell side, and on the other side of the range also, we have clear buy side liquidity up here, right? Should we be looking for longs when we start to form a low of day and ultimately, with the macro power of 3 model, enter that 950 macro window? Okay, well, there's something on this chart that I'm going to add now that will give us a bit more insight into developing our bias. So we're going to grab our fib, and we're going to use yesterday's low after FOMC to the high formed during London today, okay? And using that low and high, let me make this a bit thicker, okay? This is our equilibrium level. And on the right side, you can see there, it's 23,600.75. And already you notice the low of the opening range at this point is falling just short of that equilibrium level. So when I see that, even though, yes, we do have clear buy side up here and we've swept a lot of internal sell side here, when I see that, these lows are always a bit suspect to me and starts to help me develop my, in this case, bearish bias. Okay, so if I see lower time frame order flow, specifically during the macro window when I'm looking to take trades, support delivery in that direction of this engineered sell side liquidity pool, that's going to be my bias, and that's ultimately what I'm going to look for. Okay, so yes, there's times where we'll zoom all the way down here, okay, and then I'll say, okay, I'm looking for a reversal, but that's only if I have little to no suspicion that there's more for price to do down here below the low of day. So a simple question to ask yourself when we're seeing a heavy open is, where is low of day falling just short of or in close proximity to? And in this case, it's this clear dealing range equilibrium. This could also be a midnight opening price, another session low, plug in anything. You're just thinking in terms of probabilities and stacking confluence. Okay, so what I'm going to do now is I'm going to copy this dealing range and I'm going to go to the 1 minute chart here and paste it down. Okay, so as we just discussed on that 15-minute time frame, this blue line is that dealing range equilibrium. And upon 930 open, we see aggressive, let me grab my tool here. We see aggressive selling, okay? We get below the new day opening gap, and the 930 first presentation fair value gap sends us lower, and we start to form this low, which will be our opening range low, before we see a slight retracement. But how do we know if this retracement is going to be all the way back up to what? This clear buy side up here, or just a retracement into a premium to go back lower, okay? So understanding that this opening range low, as we've discussed, is just short of that dealing range equilibrium already suggests to me that it's likely that will return down here, okay? I just have to wait to see order flow and ultimately a setup, okay? So if I'm looking for delivery during a macro window, okay, let's fast forward this a bit. Okay, we entered that macro window, right? And I've spoke about this before, but with dealing ranges and refined dealing ranges during these macro windows, we can really get a good idea of what price is doing and where it should go to serve as the manipulation. So if we're looking at a potential continuation back down to equilibrium down here and the opening range low, where do we want to see price go first if we're looking for a setup? Do we want to see it just go all the way down there? No, of course not. Okay, so we want to see a retracement to a dealing range. So if I take the opening range high and the opening range low, I'm going to do this. We'll put a nice blue on there. Okay. This low and this high formed right at 930. We can see that above equilibrium here, this is a premium. So we want to see price go up there and trap longs. And we understand this engineered sell side liquidity here. Okay, so we're not looking for longs. I'm not looking for longs here because there's still more for us to do down here. Okay, so we enter this macro window. Let's progress. And what we'll notice time and time again, really, and I've discussed this plenty of times as well, not only are we seeing when we're bearish, price seeks some sort of premium of a dealing range, but more precisely, we want to look for key inefficiencies and key levels. So in this case, we have two key inefficiencies stacked on top of each other. We have the 930 fair value gap and also today's new day opening gap. Okay, and just kind of as a side gem here, when we have two key inefficiencies stacked on top of each other, as we see here at 957, this candle's closing above the 930 fair value gap, but really I don't utilize that as, bullish confirmation of bodies closing above there. I'll use the uppermost level of these key inefficiencies stacked on top of each other. So in this case, it's the new day opening gap high. And if we progress here, okay, we'll see that price does deliver to that high. And the high of this candle is on the top of the chart here, 23,705 even. And the new day opening gap here is what? That same exact number, 23,705. Okay, so that's a bearish algorithmic signature. Okay, so we're seeing precise delivery in a premium of our opening range. Okay, so this is exactly what we want to see for a 950 macro setup, continuation down to the opening range low. Okay, so just because we get this close above the 930 fair value gap, it's not switch my bias, enter long. We still have the new day opening gap high here. Okay, and I have first and foremost the understanding that the lower day is just above that equilibrium, which is suspect. Okay, so if we progress here, right after we deliver to that new day opening gap high, what do? We get right back below the 930 fair value gap. Okay, and that's a sign, a turning point that we're seeing a bearish algorithmic signature above macro opening price. We're sweeping highs here. We're sweeping a high here. We're sweeping this high that was formed at the start of the macro window. And then we're respecting this level. Now, on top of this, we have this large SIBI that formed actually right at 930, the actual displacement. And see how we're not filling out that at all? We're just barely wicking into it. We can't even get up to the lower quadrant of it, let alone CE. This is a breakaway gap, and that's a signature of strength. We're delivering up here, respecting the new day opening gap high, but we're seeing the turning point to close back below the 930 fair value gap with no willingness to even reach up to the lower quadrant or 50% of it. So everything's pointing to heaviness, weakness in the market, and a desire for price to go lower and revisit the opening range here. Okay, so we get back below this 930 fair value gap, and we'll see what occurs here. Let's progress it a little bit further. Okay, we do see a slight retracement here. Run this high once more. And then ultimately, what do you guys notice here as well? We have this BISI that sent price higher to sweep liquidity. Okay, so we need to see price close below this. All right, and once price closes below a BISI that was used initially to send us higher and sweep liquidity, it becomes a high probability bearish inversion. So we're looking for something like this. Down, up, and down delivery to our sell side draw on liquidity. Okay, so if we progress the chart here, we go right down. Let me put this back on here to our opening range low. and ultimately equilibrium of the dealing range. Okay, quite beautifully here. Okay, so again, ask yourself basic questions when you're looking for if price is going to continue or reverse. When we're bearish and we see a bearish open, say, okay, what is the low of day falling just short of or in close proximity to? Well, this case, we had the clear dealing range equilibrium level here. Okay, and all these levels, guys, the new day opening gap, as you see here, the 930 fair value gap, macro opening price, okay, annotating the macro windows, session lows, session highs, now macro SMTs. These are all plotted with the indicator. You can get that in the link in the description. But again, really start to dig into what key inefficiencies price is working during these macro windows, because that is the epitome of time and price. Okay, so hope you guys enjoyed this video, and I will talk with everybody soon.